Everyone thinks AI is the safest investment right now. Stocks are exploding. Companies are adding AI to their name. And investors are pouring billions into anything related to artificial intelligence. It feels like easy money. But smart investors are starting to do something very different. They're not chasing the hype. They're preparing for what happens after it. Because every major wealth trend in history follows the same pattern. First comes innovation, then comes hype, then comes the bubble, and finally, the correction. We saw this during the dot-com boom in the early 2000s. The internet was revolutionary and everyone wanted to invest in internet companies. But when reality hit, most of those companies collapsed. Only a few survived. Amazon survived, Google survived, but thousands of others disappeared forever. The internet didn't fail. The hype did. And now many investors are wondering if AI is following the same path. Because right now, expectations are extremely high. Companies are spending hundreds of billions on AI infrastructure. Investors expect massive profits, and stock prices are rising faster than actual business growth. This creates risk, not because AI is fake, but because hype can push prices beyond reality. And when that happens, corrections become inevitable. This is why smart investors are moving differently. First, they are diversifying. Instead of putting all their money into AI, they spread their investments across multiple sectors like healthcare, energy, and infrastructure. Because they understand one simple rule. You don't need to catch the biggest winner. You just need to avoid the biggest loser. Second, smart investors focus on the foundation, not the trend. Instead of chasing random AI startups, they invest in companies that power the entire system. Companies that build chips, companies that provide cloud infrastructure, companies that supply the tools. Because no matter which AI company wins, these companies still profit. It's like selling shovels during a gold rush. You don't need to find gold to make money. Third, they stay patient. This is the most important strategy. Smart investors don't panic buy during hype. They wait for opportunities. Because real wealth is built during corrections, not during excitement. When markets fall, strong companies become cheaper. And that's when the best opportunities appear. This strategy has created most of the world's wealth. The biggest fortunes weren't made by chasing trends. They were made by staying calm while others were emotional. Right now, AI is changing the world. That part is real. But hype creates dangerous conditions for emotional investors. Because when everyone believes prices will only go up, risk becomes invisible. And invisible risk is the most dangerous kind. Smart investors don't ignore AI, but they don't blindly chase it either. They stay logical. They stay diversified. And most importantly, they stay patient. Because they know something most people don't. Wealth is not built by following hype. It's built by understanding cycles. The question is not whether AI will create winners. It will. The real question is whether you will invest like the crowd or invest like the smart money.